Breaking news out of Silicon Valley's most paranoid corner, Peter Thiel, whose name, by the way, is a perfect anagram for the reptile, has fled the United States. Not for New Zealand this time, not for Malta, for Argentina. Bought a $12 million mansion in Buenos Aires' most exclusive district. Met privately with President Javier Milei. Argentina reportedly mulling offering him citizenship. And here's what he murmured on his way out the door. The United States is collapsing soon. So the question I want you to sit with for the next 20 minutes is this. Does Peter Thiel know something you don't? Does he know Michael Saylor's Bitcoin is at risk? Because here's what you need to understand. Thiel isn't your standard skeptic. He already sold his Bitcoin, and he hissed while he did it. What Thiel fears is not Bitcoin going to zero. It's something far more precise, something that may have been engineered years in advance. Something that, if it plays out, takes Bitcoin and strategy down with it in the short to medium term. Palantir knows everything, and its co-founder is quietly getting out. Welcome back, I'm Rustin. Strap the hell in and get chromed up. We got a lot to uncover today, and it is not for the faint of heart, or for those who have their Bitcoin on an exchange Jamie Dimon just declared war against.
So, this is complicated, and the government needs to do it thoughtfully. If they don't do it thoughtfully, it'll be a huge problem.
So are you happy with the way the Clarity Act is turning out?
No, because it allows them to effectively pay interest on deposits, stable coins or something like that, without the protection that they should have. And it doesn't do anything for AML BSA. It has almost no legal protections. So no, the banks will not accept it that way.
They won't
and the ABA, the small banks, the credit unions, it's not just the big guys. I'm not worried about stablecoin, but if it happened, I'm telling you, I would have nothing to do with it, and it would eventually blow up on its own. Okay, but that's my personal thing. But I do understand the concern of all the other banks. So,
well, the markup is coming. I mean, what are you going to do about it?
It is. We'll fight it. If we lose, we lose, and we'll live.
Yeah. Okay.
But it will be fought. This will not be. No one's going to bow down to this guy, okay, or that company. And he's the only one. Yeah. And he's spending hundreds of millions of dollars in Washington in this thing.
He said he's representing the whole industry.
He's full of shit.
Well, we're going to watch that one.
Yeah.
Wow. Well, I mean, this is turning into a big fight between the whole, each industry. And you're talking about blockchain and getting blockchain out.
But we do blockchain.
You've been doing that for a long time.
We have connections. We have JP. We're going to do it. I think it's a legitimate technology. I think stablecoin can be a legitimate payment system.
Now, what do Peter Thiel and Jamie Dimon have in common? Well, one of them banked Jeffrey Epstein, and the other one was allegedly busy having very interesting conversations with him about what comes after civilization. Because here's what the DOJ's 3 million document Epstein file dump in February of this year confirmed. Thiel and Epstein met repeatedly. And The Nation ran the headline, and I want you to read this carefully. Both Jeffrey Epstein and Peter Thiel believed that civilization was collapsing. Not feared, not worried about, believed, past tense, foregone conclusion. They shared a worldview, a very precise one. Democracy is a failed experiment. They might be onto something there. The proper response to a dying civilization isn't to save it, it's to position yourself to inherit what comes after. And Thiel's vehicle for that inheritance? Palantir, the surveillance apparatus he built with CIA seed money. In-Q-Tel, the CIA's private equity arm, was the first institutional funder. That company is now embedded in the UK government to the tune of nearly 190 million euros in contracts. It's woven into ICE, the CDC, the FBI, the IRS, the operational infrastructure of multiple governments simultaneously. So when the architect of the global surveillance state packs up and says the US is collapsing, I want to know if he's predicting it or accelerating it. And here's the thing Thiel, Dimon, and Epstein also have in common. Deep institutional pathological hatred of Bitcoin. Not cryptocurrency, not digital assets. Bitcoin. The specific one that is unseizable, undebasable, and outside their system of control.
Tech stagnation is that when something does happen, we don't even know how to process it. So, I think Bitcoin was a big invention. We can debate whether it was good or bad, but it was a pretty big deal. And it was systematically underestimated for at least, the first 10, 11 years. You could trade it. It went up smoothly for 10, 11 years. It didn't get repriced all at once because we're in a world where nothing big ever happens. And so we have no way of processing it when something pretty big happens. The internet was pretty big in 99. Bitcoin was moderately big. The internet was really big. Bitcoin was moderately big. And I'd say passing the Turing test is really big. It's on the same scale as the internet.
The guy literally believes in nothing. Well, except the Antichrist. He is hyper-focused on the Antichrist. Look, that's what he said on Rogan a while ago, but as we showed you earlier, he just recently dumped his bags. Like I said, he never believed in anything besides Antichrist techno-fascism. That's why Epstein funded Brock Pierce and Coinbase. That's why Coinbase became the preferred vehicle for institutional adoption of Bitcoin while remaining the easiest place for a government to freeze your holdings at the request of a banker. These are CBDC people. Always have been, always will be.
I've traced the entire history of Epstein's interaction with different developers and compromised networks that he tried to infiltrate with Peter Thiel in 2011 and beyond.
To try to pull Bitcoin back into the fold?
Yes. Yeah. There were many ops, and I would almost like to do a whole podcast on those different ops in Bitcoin because I was there and I saw them all, and I saw what Brock Pierce tried to do.
What did Brock Pierce try to do?
Well, Brock Pierce, I think, was Epstein's guy in the digital currency space. And he tried to persuade me that Satoshi Nakamoto was Dr. Craig Wright, who's the guy that recently got a year in prison, and I think, not sure if you heard it, for pretending to be Satoshi. And he ended up being an essential part of creating an alternative version of Bitcoin. Brock Pierce also was the co-founder of a stablecoin called Tether. And Tether was later sold to a company called Bitfinex that I had invested in. That stablecoin Tether was the gateway drug for central bank digital currencies. And when Bitcoin went open source, there were several attempts to create alternative versions and fork it off and confuse the community into going to a more centralized version of Bitcoin called Bitcoin Cash and Bitcoin Satoshi's vision. And I can trace back all the conversations, and the developer that said that had all the credibility, Satoshi handed the key, the development over to Gavin Andreessen. It was Gavin Andreessen that met with Dr. Craig Wright and said, this guy's cryptographically proven to me that he is Satoshi. And that was a lie. He hadn't. I can go through all the different people that led to these crypto market and VC funding. The crypto market, the stablecoin market, the central bank digital currency market is all a psyop. Venture capital funded, complete wealth extraction vehicle, complete degenerate gambling, ushering in a vital key by David Sachs, who was introducing stablecoin policies and Genius Act and all the programmable money that turns stablecoins into programmable police and surveillance grids in the Bank Secrecy Act and Genius Act and Patriot Act and Clarity Act now. They want you doing everything but using Bitcoin. And there were several operations, Operation Choke Point 2.0, various other things, which we could go through all of them in a different time if this is interesting. There's too much to cover. To take us to the stablecoin alternative crypto gambling world. But Bitcoin in self-custody still exists where there's 25,000 nodes. There's a distributed supercomputer. In fact, interestingly, Iran is the largest sovereign Bitcoin miner in the world, powered by nuclear energy, which was always what this was about. It was never a nuclear weapon. It was always nuclear energy. Everything's about energy. And we're resetting the world based upon energy right now. And what are they trying to do? They're trying to get you to own Bitcoin in a treasury company with Michael Saylor. They're trying to get you to own Bitcoin with BlackRock in an ETF. They're trying to get you to borrow against your Bitcoin through Cantor Fitzgerald and Howard Lutnick connected to the Epstein network. They're trying to get you to not own Bitcoin, to own crypto, to use stable coins, to use central bank digital currencies, to put it in a Wall Street wrapper, to put it in a debt wrapper, because the last thing they want is for you to own Bitcoin in self-custody.
Now, I want you to feel the cognitive dissonance of what is happening right now, and I want you to actually think about what it all means. Peter Thiel was an early donor to Donald Trump, who currently is the president. He personally handpicked J.D. Vance, currently vice president. His former co-founder, Elon Musk, richest man on the planet, spent the better part of the last year running Doge from inside the White House. We know how that ended. Nothing has been the same since. But still, his fund was one of the earliest backers of SpaceX. His Palantir is a $1 trillion company running deep inside the government. He claims to distrust. Literally everything he ever wanted has happened. Everyone he wanted in power, currently in power. And he's moving to Argentina. Here's what you might be missing. While fleeing, Thiel's companies are sitting on approximately $687 million in active U.S. government contracts. He built the infrastructure, he picked the politicians, he embedded his surveillance architecture into the state, and now he's leaving. Not because the plan failed, because the plan worked. He didn't just drain the swamp, he replaced the water with something else. And now that the new thing has been set in motion, he doesn't need to be standing next to it when it completes its cycle. It is oddly like 1946 vibes, but with techno-fascists and a private jet. And Argentina has a very particular history of welcoming that kind of exit. Now, can Michael Saylor and strategy enter a death spiral that brings down the economy? That's crazy talk, but let's see what Peter Schiff has to say anyway.
You know, every week, Saylor puts out on his X account how much Bitcoin strategy bought. And, you know, it gets the money to buy the Bitcoin by selling Stretch. And Stretch is this preferred stock with an 11.5% yield, which is actually a little bit above 11.5% now because it's trading at about $99 instead of $100. But I think it's about to crack, which means they're going to have to jack that yield up to get the price back up to 100. Now, one of the ways they claimed that they can fund the dividend obligation is because they had a couple of billion in cash that they raised buying stock. Was it $2 or $3 billion they sold stock and they had cash and they put it in treasuries, right? And so this was like a couple of years coverage to pay that coupon. Well, this past week, instead of buying Bitcoin, strategy bought back some of the 0% convertible notes that didn't mature for another 3 years, but where the lender could demand repayment in cash in 2 years. You know, 2 years from now, June 2028 was when the bondholder could say, you know what, I want my money back. And, you know, maybe they all would have asked for it back. Probably they all would have wanted their money back in 2 years. And so what Saylor did is he paid it off today. Instead of waiting 2 years, he paid it off, and he gave everybody 92 cents on the dollar. And he's making a big deal. Oh, I'm a genius. This was great. I was able to buy back debt at a discount. So I only paid 92 cents. Had I waited 2 years, I would have had to pay $1. And so he's talking about how this is this great thing. And hey, look, this shows you how great my business model is. I can, you know, manipulate the balance sheet. I can take advantage of these great opportunities. Because look, I bought $1 for 92 cents, right? I'm adding value to shareholders. That's all bullshit. He didn't add any value. The notes are only worth 92 cents because there's no interest for 2 years. If you give me 92 cents today, that's better than giving me $1 in 2 years because I can take the 92 cents and I can earn interest on that. And in 2 years, I'll have the 100 all on my own. Because now, instead of collecting, and of course, Saylor had that money in a money market. He was collecting interest on it. He could have collected interest for the next 2 years on that money. Instead, he had to give it to his creditors. So he didn't make anything. He basically paid what the notes were worth at that point of time. So the whole idea that he's some kind of financial genius and he took advantage of some kind of arbitrage, that's all BS. right? But what it also does is it took away more than 60% of his liquidity. That was the liquidity that was supposedly there to pay the interest on Stretch so that he wouldn't have to sell Bitcoin. Well, why did he blow through that? Why did he even do that? There must have been a lot of pressure on him behind the scenes to buy back that debt. And that, to me, is an indication that, the wheels are coming off of this thing.
Michael Saylor's response, aside from a reported $30 billion being moved to Coinbase Prime, was this: there is not much Bitcoin left, and they've already bought 2 to 3x the Bitcoin supply produced by miners this year. And they want to try to buy all Bitcoin produced between now and 2140.
There's not much Bitcoin left because at this point, all of the organic supply of Bitcoin being produced by the miners is being taken up by the Bitcoin.
And you bought more than was mined this year for strategy.
Yeah, we have. Yeah, the formation of digital credit means that the credit market itself is absorbing all of the organic supply of Bitcoin from now to forever. Our company will probably buy all of the Bitcoin gets produced by the miners between here and the year 2140. Then there's no more Bitcoin.
2140.
Yeah.
Miners can produce it. I heard you actually saying that you're probably going to buy all the Bitcoin that gets produced between now and 2140. I don't know how your succession planning looks over at Strategy, but how does that work?
Well, the miners produce about 450 Bitcoin a day. That works out to, say, $10 to $11 billion a year.
Right.
We bought $11 billion of Bitcoin so far this year, and we're not even halfway through the year. So we're already buying at 2x the rate at which they're able to produce it. The digital credit business, STRC, has been an explosive success. It's gone from 0 to $10.5 billion outstanding in 10 months. But we sold about $2 billion of that credit in May, which means we're at a $24 billion run rate. So just that one instrument alone is going to account for 2 to 3x the Bitcoin supply that's produced by the miners.
As well.
Yeah, once we bought all the Bitcoin available by a natural seller, the price has got to actually move up to find a willing seller. So the way to think of it is there's a consistent bid that covers all of the natural organic sellers. And once that happens, every single time $10 billion of capital flows into this marketplace, that's 1 year's supply or one turn on the axle. So, $10 billion or more may flow into the ETFs like IBIT. That's one source of demand. Banks are creating credit. So when a bank issues or creates $10 billion of credit against Bitcoin, that's another year's supply. Other companies like Strive are selling credit instruments like SATA. That's creating demand. And of course, our company is creating massive amounts of demand. All of those things are just turning the axle, powering up the network, driving up the price. And they have an effect of damping the volatility. One of the reasons, if you go back about 4 years, we traded down 75% peak to trough. And this time, the drawdown wasn't nearly as bad. And the reason why is because there's another source of demand that's consistent every day.
Here are the facts as of 5 days ago, straight from their own press release. Strategy now holds 843,738 Bitcoin. They just completed a $1.5 billion debt repurchase, buying back their 2029 zero coupon convertible notes at approximately an 8% discount to par. Saylor framed this as accretive. He says the capital structure has multiple levers, multiple variables, total optionality. Here's the lever that matters. Their USD reserve is now 871 million. That reserve is the firewall between Strategy's dividend obligations, specifically the 11.25% variable rate STRC preferred stock, which has grown to 3.4 billion in notional outstanding, and having to sell Bitcoin to fund those dividends. And Shifty Pete, who has been wrong about Bitcoin more times than I have overcooked the chicken tendies, asked the one question that cuts through some of the Giga Chad narrative. There must have been a lot of pressure on him behind the scenes to buy back that debt. And that to me is an indication that the wheels are coming off this thing. Schiff's words. Here's the specific concern. The debt buyback consumed more than 60% of the liquidity cushion that was explicitly earmarked to cover those preferred dividends without touching Bitcoin. That cushion was the firewall. 60% of it is now gone. Bull or bear on MicroStrategy, that liquidity question is worth keeping an eye on. Let us know in the comments below. Fading Giga Chad has historically been a terrible move. But if the macro suppression continues and Bitcoin trades sideways while those dividend clocks keep ticking, things get very interesting very fast. But here's the thing. I don't think that's actually what's freaking Peter Thiel out. I want to be precise here because precision is the whole point of the show. Peter Thiel did not spend 3 decades building a global surveillance empire, handpicking a VP, and studying civilizational collapse to be frightened by a leveraged equity position in a publicly traded company. What he's running from is the Ponzi itself, the one that's been running since 1971, the fiat system, the petrodollar, the debt machine that has consumed the future to pay for the present for 55 years running. And right now, in real time, the walls of that machine are showing very specific, very measurable cracks, 3 of them simultaneously. Let me show you what the actual nightmare scenario looks like. Crack 1, the dollar is losing the room. As of Q4 2025, the US dollar accounts for 56.32% of global foreign exchange reserves. That number was 71% in the year 2000. Every single year, quietly, methodically, a little more of the world decides it does not need dollars to conduct trade. BRICS nations are actively building oil for gold, oil for yuan settlement infrastructure. Trump's response, threatening 100% tariffs on any nation that tries to bypass the dollar, is not a strategy, it is a tell. When the world's reserve currency has to be defended by threats, you've already lost the monetary argument. And here's the accelerant nobody in the mainstream media is connecting. The dollar doesn't need to collapse overnight to be catastrophic. It just needs to fall fast enough that the Fed can no longer paper over the gap between what the US government spends and what the world is willing to absorb. That gap is now $39 trillion in outstanding federal debt and growing. Crack 2, the oil price is a loaded gun pointed at the food supply. Goldman Sachs is projecting Brent crude averaging 85 plus a barrel in 2026, what they are calling the largest supply shock in modern history. The Strait of Hormuz, which roughly 20% of global oil flows through it, is operating under geopolitical tension right now, obviously, today, this month. We are currently again in Schrodinger's peace deal. The United States diesel inventories are at record lows for 2026. And here's a number that should make everyone watching this video's stomach drop. The IMF in April of this year, 2 months ago, explicitly warned that sustained high oil prices could trigger a food security crisis affecting nearly 1 billion people worldwide. 1 billion people, not a recession, a food crisis. That kind of crisis doesn't show up on a Bloomberg terminal. That's the kind that brings governments down from the street level up. We've seen it happen in other countries. Crack 3, the response to the first 2 requires destroying the dollar. Follow the logic all the way through because this is where it gets important. Dollar loses reserve status gradually. Oil spikes, food prices follow. The Fed is staring at a political crisis, not a monetary one. An inflationary spiral happening simultaneously with the growth collapse. What economists politely call stagflation, what the rest of us call 1979, but with 39 trillion in debt attached to it. Their only tool, print, borrow, monetize, dilute. They will print. They've always printed. Every single time the choice has been make the hard structural decision versus print money, the answer has been the same for 50 years. And here's the thing about the kind of money printing that follows a simultaneous dollar, oil, and food shock. It does not flow evenly into the economy. It floods into hard assets, scarce assets, real assets, gold, real estate, and the asset that every architect of the old system has done everything in their power to corrupt, co-opt, surveil, suppress: Bitcoin. Because Bitcoin is the only asset on the planet where no amount of monetary policy, no amount of executive order, no amount of Jamie Dimon lobbying Congress changes the supply. 21 million, full stop, forever. Peter Thiel got out of Bitcoin early. He sold it. He hissed while he did it. But he sees exactly what this scenario does to Bitcoin in real purchasing power terms over the next decade, which is precisely why the infrastructure he built to survive civilizational collapse, Palantir, the political network, the Argentina compound, is engineered for a world where the dollar has been significantly structurally devalued. The elites don't merely predict monetary collapse. Some of them engineer the conditions for it. Because on the other side of a controlled demolition is a reset. And resets are only profitable if you position yourself before the building was lit. GigaChad sees The exact same fire. His response, polar opposite. Where Thiel builds an exit, Saylor builds a fortress. 843,000 Bitcoin, the single largest private holding in human history. He's buying 2 to 3 times the annual mining supply. He stated his goal is to acquire every Bitcoin produced between now and 2140. He is not betting that the system holds. He is betting that when it breaks, and by the math of that debt stack, it will break, Bitcoin is the one life raft that cannot be confiscated, cannot be devalued, and cannot be printed away. Both men see the same collapse coming. One is fleeing it. One is front running it. The math will decide which bet was right. But they're both running from the same fire. Now let's bring it home, because all of this brings us back to Dimon. We don't agree with Jamie Dimon on much around here. Definitely not the Bitcoin thing, not much of any of it. But today, literally today, yesterday, when he called Brian Armstrong, and I'm quoting directly, full of shit on the Clarity Act, he may have accidentally stumbled into the truth about something adjacent. Any Bitcoin sitting on Coinbase or any exchange is an IOU. It is not Bitcoin. It is a digital pinky swear from an institution that is now being actively targeted by the most powerful banker in the world in the halls of Congress, fighting the very legislation that would give crypto firms regulatory parity with banks. And while that war is being fought in Washington, your Bitcoin on their servers under their rules, subject to their compliance department, and whatever legal freeze order arrives on Monday morning, that is not self-custody. That is not how you separate money from state. That is not how you opt out of the system that Thiel built and Dimon's protecting. Fortunately, our friends powering this show at the Bitcoin Way, they got you covered. Our friends at the Bitcoin Way do this for a living. Hardware wallet, your own node, full on-chain verification. They walk you through every step until you mastered it. Plus, privacy phones, Plan B residency, the whole sovereignty stack. Schedule your free 30-minute consultation today by scanning that QR on screen or click the link in the description. Do it today, not next week, today. And here's the dirty secret about every other Bitcoin-backed lender. They're lending your collateral out. They're rehypothecating it. They're playing the same fractional reserve game the banks play with your Bitcoin. And when the music stops, your stack is gone. Ledn doesn't do that. Their custodied loan product means your Bitcoin sits in cold storage. Never lent out, never touched. That's the Satoshi standard. 8 years, $10 billion in origination, 0 customer Bitcoin lost. Lowest rates in the industry, no hidden fees, no fine print, auto top-up so you never get liquidated by a wick. 0 prepayment penalties, paid off whenever you want. Don't sell your Bitcoin to buy a house, a car, a business. Borrow against it. Keep your stack. Scan the QR or click the link in the description and head over to ledn.io. If you made it this far, you understand why what Thiel did matters. Not because he's right about everything, not because Argentina is the answer, but because when the man who built the surveillance state handpicked the VP and spent his career studying what comes after empire decides that the building is structurally unsound, you don't argue about the blueprints. You make sure you hold the exit key. When the cage closes and the grid goes down and look around, it's not a question of like if anymore. How are you broadcasting your transactions? How are you reaching the network? SAT123 is the answer. Satellite Bitcoin gear, off-grid kits, sovereign communications, the hardware that keeps you connected to the network when the network they control goes down. Built by Bitcoiners for Bitcoiners. Use code SIMPLY to get you 15% off at the checkout at SAT123. Link in the description. Scan the QR. Don't be the guy who self-custodies and can't transact. Hey, hope you guys enjoyed this one. Let us know what you think down below. Don't forget to pay the like toll, subscribe, give us a pamp, share this with someone who thinks the government is still coming to help them. Love you guys. Hope you have a great weekend. Catch you next time. Peace.
If you prefer to go down with the ship, you.